Okay, so as we're going to dive in just a couple case studies and some areas where really focused around more tax planning issues. And so I know many of you have attended webinars in the past. We've discussed the Augusta rule. And so one of the things I wanted to share with you is, and I'll go through a background if you're new, what the Augusta rule is. But basically, a recent court case upholds the Augusta rule. However, it also demonstrates the importance of being in compliance, which includes documentation. And so I'm going to walk through a little bit of what this looks like. And so what is the Augusta rule? The Augusta rule is otherwise known in the tax code as Section 288G. Basically allows homeowners to legally rent out their home to their business for up to 14 days per year, resulting in a sizable tax deduction. By renting your home to your business, you can deduct the rental payments on your business tax return while avoiding the tax on your personal return under the Section 288G. So for example, if you're renting your home for 14 days at $3,000 per day, based on comparable rental options, that would create a $42,000 deduction. If you're in the 40% tax bracket, that would save you about $16,800 annually. So essentially, if done correctly, it's a tax-free distribution from the company. So that all sounds amazing, right? Like, oh, sign me up. Now, the reality is you have to make sure that there are a couple things. So these are the highlighted compliance risks. You have to have a business purpose. Why would this make sense for the company to rent your home, right? So an area we started our conversation today is about our simplified monthly planning day. So our business owners who embrace this idea of using a monthly planning day, that gives you 12 of the 14 days. And so that's one area of having a business purpose. Why am I doing this as a business owner? We think our simplified planning day is a great business usage of your time because it allows you to get out of, this idea of working in the business and work on the business, which is a critical component of your long-term success. Item number two, not having documentation to support the business purpose. That's why we show you, here's an agenda for a sample day. You want to take notes on what you actually covered, who might have been involved if it's not just you as the business owner. And so you want to have documentation that supports this. So this should be meeting agenda, notes. I always set up calendar invites to make sure it's clearly put on the calendar and time is blocked. The third component of this is determining fair market value rent. So this gets a little bit tricky. How do I have a comparable for my house, right? There's not a lot of people are, renting your home on a daily basis, right? So do you use an Airbnb? Do you use a hotel comp? Do you use some filming location quote? So you just have to, you have to make sure you document fair market value rent for at least justification of how you got to the number. It cannot be made up. It can't just be pulled out of thin air just because I felt like a number. So again, this is where we really help to craft how to make sure there is a business purpose, how do we do the documentation appropriately, and then we built a tool on how to use some different ways of calculating fair market rent. But at the end of the day, once you find something that makes sense for you, you also want to be working with your tax professional to make sure that it's in compliance based on all the things that you're doing. And Brian, you can feel free to jump in, but there was a court case. I am not an attorney that basically dealt with this issue. And it was kind of interesting, right? So a part of it is like, hey, this was a win for implementing the Augusta rule, but there was also a lot of components that said, hey, kind of, I don't know if it was like shame on you, but you took too aggressive of a tactic and you can't justify and support why you did it.
Yeah, and I am an attorney. And so I got to read through this decision, and it was what it boils down to, guys, is exactly what John just said: documentation. The plaintiff in this case, who is attempting to enforce the Augusta rule, was not the best document or record keeping business. They didn't check all the boxes that John just went down. And if you've got the documentation to back all of these things up, and you can drop it in front of the IRS if they come knocking at your door, more times than not, I can't say every time, but more times than not, you're going to be in a safe position. You just have to be really thoughtful about maintaining those documents and records in a separate file. You never get rid of them, or at least not for 10 years, to make sure that you've got it backed up in the case of an audit.
Yeah, well, and it's helpful to hear that. And a couple of bullet points down at the bottom: unreasonable rent expense. So they kind of just made up a number. They had no real comparables. And so that obviously kind of, forced the court to just throw it out and just say, okay, we think this is reasonable. So that's why we want to be proactive in the process of how we get to a number. And then the last one on here, unable to meet ordinary and necessary. That's always a little tricky one. That's like kind of the gray area. And again, that comes back to this idea of really documenting the business purpose. And so this is really a tricky one, and so you want to make sure you do it right. So if you're in listening to our webinar today, really embrace this idea of, you know what, I like this idea of a monthly planning day where I'm away from the office and I can then use rent my home to my business for this monthly planning day. Then you're a great candidate for this. You're not a great candidate if you're like, oh, I want to save the money, but I don't want to do any of this stuff. That automatically disqualifies you because everyone gets excited. Yeah, let's save the taxes. But they're not doing the day, they're not using it appropriately, and you can't just get write-offs. There has to be a business purpose. And so that's the clear message that came out. When done right, you can justify that this is a reasonable expense. But when done wrong, then you're really setting yourself up for some challenges ahead.